So you've made a bit of money now and are looking to reinvest it so you can achieve that financial freedom. So what should you invest it in? Stocks or real estate? Well, in today's video here, we're going to be chatting about the pros and cons of real estate versus stocks so that you can best understand each of them and which one you should invest in for your own personal circumstance. You've probably been learning all about how to save and invest your money smarter, and that's great, but the problem is when you're reading any stocks or real estate books, they're all about that one subject, never really giving you that compare and contrast of both. So in today's video, like I said, we're going to be comparing the pros and cons of real estate versus stocks so you have a best understanding of which one you should be investing in, as this was one of the biggest questions I had as a young real estate professional of where should I put my money? And if you want to learn the exact strategy that I am currently implementing, then make sure you watch to the end of this video here, as I'll be sharing exactly what I'm doing and what my plan is to achieve that financial freedom sooner. Now, if you're new here, my name is Matthew. I'm a realtor in the GTA, and this is my channel where I share everything I learn around investing, real estate, and personal development, helping empower you to make the best decisions possible. So if you're interested in that, make sure to hit the subscribe button and the notification bell to not miss out on any one of my future videos. Other than that, let's just hop on into it. And the first thing we're going to be talking about is all about real estate and their pros. And the first pro associated with real estate is the cash flow. As at the end of the day, the money you invest in real estate proportional to the money you invest in stocks will produce you a higher cash flow in real estate. And not only will it produce you a higher cash flow, but you'll also get that cash flow on a more regular basis. As when you invest in stocks, the only cash flow you're going to be getting is if there's dividend stocks, and most stocks that are dividends get paid out on a quarterly basis, whereas real estate investing, you're going to be paid on a monthly basis from the renter's checks that come in each month. Now, the next pro associated is you get to utilize other people's money in the form of leverage, and this is one of my truly favorite things about real estate and what I think really makes real estate sometimes stand out from stocks. As let's take a simple example so you can better understand this. So let's say you had $25,000 in the bank and you're looking to invest it. And let's say both our stocks and our real estate go up about 10% a year, which is, you could say, the average historical rate. Well, in stocks, if you had after 1 year, that $25,000 will be worth $27,500. After 5, about $40,000, and after 10 years, about $65,000. So instead, let's say you use that $25,000 to purchase real estate using other people's money, and you use that $25,000 as a 25% down payment to purchase a $100,000 home. Now, keep in mind, the minimum down payment in Canada is 5%, so that same $25,000 could get you a much bigger property if you would like, but we're keeping this example super simple. So now that you have a $100,000 home, and let's say it appreciates at the same 10% a year, well, after year 1, your total value is going to be $110,000. After year 5, it's $160,000, and after year 10, it's $260,000. That's almost a $120,000 difference between the appreciation you'll see in stocks versus the appreciation you'll see in real estate, and just due to you utilizing the power of leverage. And that's not to mention that you'll also be getting the cash flow during this time period and be utilizing renters to help pay that mortgage on that property. And the final pro you can get associated with real estate is getting advantage of all those tax benefits that real estate has to offer. So while you can't hold real estate in these tax sheltered accounts like a TFSA or RRSP in Canada, what real estate does offer you is a lot of advantages to help write off these expenses, reducing your income. So any interest payments, any insurance, any repairs and maintenance or professional work you have done on your real estate property is a tax write-off, which will overall help you reduce your income and therefore reduce the amount of money you're paying in taxes. So those are the core pros I see associated with real estate. Now, before we move on to the cons, I also want to quickly mention that another advantage of real estate is it's a tangible asset. As when you buy a stock, you're typically only going to see a certificate or a number ticker on your computer screen saying, hey, you own 20 or 30 of these stocks. Whereas real estate, you can walk in, you can touch, you can see, you can smell what it's like to actually own that piece of property. And I don't know, there's something just satisfying and appeasing about walking into a place you own rather than just seeing it on a computer screen. But let's now move on to some of the cons associated with real estate. And the very first con associated with real estate is it's a lot more hands-on. As when you invest in stocks, you don't have to worry about it as other people are managing that company. However, when it comes to real estate, you're the own CEO, chief financial officer, chief marketing officer, and more. You're pretty much everything to this company as you're the sole employee. Therefore, it's going to take a lot more of your time and a lot more legwork up front. Now, what's great about real estate investing is you can create systems and processes and outsource a lot of this work to help you do it on autopilot. However, to set up all that stuff, it is going to take time and money for you to do it. And one of the best ways to outsource or to automate your real estate investments is with a management company. And even then, it's still going to be a lot more work than stocks, as you're still going to have to manage that management company. And the next con associated with real estate investing is the deal flow. Now, this is because when you invest in real estate, not only is it going to take a longer time period for you to actually find that good investment deal, but closing on that investment deal is going to be much longer when compared to stocks. As in the market I work in the Greater Toronto area, we've been in a seller's market recently and just overall historically, which means there's more buyers than sellers. Therefore, the competition for those good deals is going to be more. Therefore, it's going to take longer to do it, and you may have to be a bit more aggressive to get those deals done. Now, this also could be seen as a positive, as maybe you're someone that gets anxious and antsy in the pants and can't sit still if the market is crashing. What's great about real estate is you don't see that constant ticker of what that value or appreciation is of the home, so you don't really worry or get nervous around those things and want to sell that home. Or even if you do want to sell that home, it's going to take a lot more effort, and therefore it might deter you, which might help give you a longer term mindset. Now, the final negative associated with real estate is it's a higher barrier to entry, both with respect to money, but also education. As if you're looking to buy an investment property in the Greater Toronto area, you're going to have to start looking in the $300,000 to $500,000 range for a condominium. And when you're buying a $500,000 condominium with a minimum down payment of 5%, you're going to need to start investing at $25,000. However, with stocks, you can easily start with $100 or even less for that matter. Now, also on the education side, because it's more hands-on and there's a lot more tasks associated with real estate investing, there's going to be a lot more for you to learn that's associated with real estate investing as compared to stocks. Now that we've chatted about that, let's dive on in to the pros associated with the stock market. Now, the first pro is it's a lower barrier to entry, both with regards to costs, as well, yeah, there are index funds that cost thousands of dollars. You can typically easily find an ETF that mimics the exact same thing. So therefore, you can buy that NASDAQ or that S&P 500 for way less money, but it also takes less education, as when you buy the NASDAQ, you don't have to worry about managing those companies or anything along those lines. You just need to make sure that it's a smart investment for you. And if you're investing over the long-term period of 20 plus years, the chances of you losing in the market are pretty much, if not 0%. So it takes less education to invest in those because you're not going to be actively managing it. It's more of a passive management. Now, the second pro associated with the stock market is it has a higher diversification, as because of the lower barrier to entry for individual stocks, you can disperse that $25,000 you would have put towards a down payment across a variety of different companies. Or what I would recommend is buying a variety of different indexes that each cover a wide variety of companies in each side of an index. So you could get exposure to the 100 biggest companies through the NASDAQ 500, or the 500 biggest companies through the S&P 500. Or if you wanted emerging markets, there's an index for that. If you wanted innovation, there's great indexes for that. Now, regardless of what industry you want to invest in, I'm sure you'll be able to find an index that is right for you. And the third pro associated with the stock market is it's a more passive strategy. So if you don't enjoy or don't want any additional extra work with your investments, stock market is definitely the way to go, as you're not going to have to worry about finding tenants, managing them, or any repairs or anything else for that matter that comes up within real estate investment property. As for the most part, when you get a strategy or you start to implement a strategy with investing in the stock market, once you formulate that strategy, there's not much more work to do other than push the buy button to purchase more indexes or stocks. And even for that matter, can be automated so that you literally can just sit back on a beach and continue to investing as long as that income keeps coming in. Now, of course, not everything is roses and rainbows with the stock market. So now let's chat about some stock market cons. And the first major con is it's going to have smaller returns. As over the last 200 years, the stock market has produced 10% average annual return. And if you remember back from our previous example of comparing 10% return in real estate versus 10% of return in the stock market, real estate is going to win every time. So now you might be thinking, well, hey, I could probably beat the stock market. It probably isn't that hard. Well, unfortunately, most professionals can't beat the stock market. And a great example of this was a bet Warren Buffett made with some of the largest hedge fund managers saying, hey, I'm going to pick this S&P 500. You guys can pick whatever stocks you guys want, and we'll see after 10 years who has better returns. And as you guessed it, as one of the best investors of all time, the S&P 500 won out, and it wasn't even close, as you can see. So now that you know about the bet and the results of it, my question to you is, do you still believe you can beat the stock market even though the largest hedge funds in the world that have millions of dollars to spend and thousands upon thousands of hours of manpower to try and beat the market couldn't? What makes you think you can beat the market? I'm not saying it's impossible. I'm just saying you need to have a damn sure conviction that you're better than these top hedge funds in the world. And my guess is you're not. And that's why Warren Buffett recommends everyone invest in index funds unless you're going to be deeply involved in the stock market. And therefore, you need to be comfortable at taking a smaller return in the stock market over real estate investing. Now, the next major con associated with the stock market is it's definitely more of an emotional roller coaster. As with the stock market, you're going to feel and see every time your stocks or your index funds take a plummet. And as a result, when you get that emotional drag of seeing your stocks plummet, you could get on the hook for panic selling. And this can be the worst possible thing you could ever do when you're trying to invest, is when you're buying high and selling low. Investment is all about buying low and selling high. And the stock market definitely is more of an emotional roller coaster, as you do see all those lows. Whereas when you compare it to real estate, there's not someone that knocks on your door every day and go, hey, your home's up $50,000 today, or hey, your home's down $25,000 today. There's nothing along those lines. You just know what you bought it for, and maybe in the future you're going to sell it for more. So you're not going to be aware of the day-to-day pricing with real estate as you would with stocks. Because the stock market does offer you more liquidity, you're going to have more of a short-term mindset where you think you can buy and sell, buy and sell. Where in reality, as it's proven over time, the key to investing smartly is over the long run. Now, as you can see right here, here's the odds of losing out on money in the stock market. As you can see, in the short term, if you do have that short-term mindset and you get fallen in the trap of trying to beat the market or trying to time the market or just get emotional, you're going to lose money. However, if you have that long-term strategy and stick to your guns when the times get rough, you're going to come out on top. So then what is my strategy? Well, over the long term, I do prefer real estate investing. I personally love that tangible effect of being able to see and feel it, but I also just love the ability to have full control over the investment asset and utilize other people's money to grow my own personal wealth. Now, with that said, I think real estate is a great opportunity in the long run. However, the barrier to entry is very high. And what I am doing now is I believe it's all about timing the market, not timing the market. So I am currently investing in stocks while also putting some money aside to eventually buy my investment property. But in the meantime, I'm not just sitting on the sideline with real estate investing. You need to continue your education until you're ready to invest in real estate so so that when you do purchase that investment, you can make the best and most optimized decisions and choices possible. So I go out, and just because of my job of being a real estate agent in the GTA, I get experience of analyzing deals and looking at homes and being able so that when I'm ready to invest in real estate, I know exactly what I'm looking for. Otherwise, I'm just gonna continue to invest in the stock market until I'm ready to invest in real estate. So I'm first wanting to get my time in the market, in the stock market, putting some money there while also taking some money and putting it aside so that I can prepare to purchase my very first investment property. And when I purchase my very first investment property, what I'm going to be doing is utilizing a strategy called house hacking. And if you're interested in getting started in real estate investing, this is a strategy I would highly recommend you start out with first. If you're interested in learning more about that, you can check out my full video right there going over the entire thing. Now, if you've enjoyed this video and it gives you a better idea of what you should invest in, the stock market or real estate, and the true answer is you shouldn't be investing in this or that, you should probably be investing in a combination of both, make sure to smash the like button as it truly does help me out with the YouTube algorithm. And if you're interested in learning more about real estate, investing, personal finance, or personal development, make sure to hit the subscribe button and the notification bell to not miss out on any one of my future videos, as this is what this channel is all about, is me sharing all the information and knowledge I learned along the way. And like I mentioned, if you're interested in investing in real estate, the video I recommend you check out next is all about house hacking and how you can get started doing it from A to Z. Other than that, guys, I hope you have a great and successful week, and I'll talk to you next week.